The following is a presentation of TFNN. Nine Before 9 with John Logan. 9 minutes on the stock markets before 9 a.m. every trading day. Call now, toll free, 877-927-6648, or internationally, 727-445-1044. Now, John Logan.
In a good fashion here, looking at some of our indicators. Got a Labor Day across the planet except for the United States today, so a lot of people off today overseas. Let's take a look at the S&Ps, and my God, they're up again. So as we look at this, let's take a look at the big inflection point here to pay attention to. We had a weekly close down below that 2386.87 area, but we're kind of bumping back up against it this morning. It's kind of tough to really, we talked about this with all the internals the way they are right now. I mean, these things are probably going to goose the highs again as they've kind of gravitated towards the highs again. Things when their highs go higher, I wouldn't be looking at this as a chance to short right now, even though I think ultimately we're going to have some decent downsides. We're just, again, I think we're probably going to have a spike move up before that even thinks about happening, just to get everybody completely out. Let's take a look at crude. Again, there's been better ways to trade crude. Here's the daily on crude. Again, if you're trying to put a stake in the ground on the long side, there's really no way to play defense until we at least start getting daily closes back in the balanced area and possibly trade back up into 51.73. But right now, no dice. There's better ways to trade that, as we've been talking about with some of the XLE components. Gold, defending quite well the 1260 last weekend, this week, 1260 and a half to be exact. So now we got a new fair auction that's kind of edged higher. I'm still going to hang on to that 1260 and a half area to try to base longs. If that doesn't work, you've got 1237.38 down below. Make sure you put your stops in. 1300 top of the box up there, 1297. That would be your initial targets. The dollar situation, not super excited about being long this product. Just moving down, breaking down to the weekly balanced area, and then consolidating around the lows. 99.63, 99.96. That's going to be kind of your dig in area if we start rallying on the short side. But I think you've got to trade daily closes back below the bottom of our profile on the dailies, which is around 98.74, and trade that into 97.14.15 as we've been speaking about pretty often. Let's take a look at the 10-year. Man, kind of an amazing situation, actually. Just really, when you think about it, the market's on its highs. 10-year just continues to edge up, as well as the 30-year, 125.20. Got a daily close. I would say that's above the noise area. Just been kind of rattling around here. A market move up could cause this to come down, but I don't know. You've got a chance, in my opinion, to trade this at least for a half a handle higher, while putting some stops in, getting a decent risk reward, and maybe even a handle higher, actually. Silver, we've been talking about this one. Not something to really play around with at all. I think gold is just your better trade altogether. And when you look at silver, big supports at 16.40, 43, 44. Again, we talked about this, that reversal back in the fair auction and being kind of the relatively weaker of the two metals there. Copper, this is a trade I really, really like. We got a weekly close back above 2.57778. You talk about a low risk trade. I really, really like this trade. Stops below 2.577 on copper. I think the dollar's going to slide a little bit more in copper. With the market starting to reach for new highs again, you got to figure this thing. You got a really good risk reward trade on your hands too. 2.7529 is the target. on copper. A couple of the ETFs just to be aware of. Let's take a look at the utilities here. All right, so we talked about really there's no way to trade this from the short side right now, and I still feel that's the case. And I love how this thing defended that area. Former profile high 51.64 on this. It's just amazing how this is acting. Amazing. Here's the weekly. I mean, that's not a reversal pattern. I think it's a pretty safe play. I mean, you've got a lot of things in your favor on that trade too. 10-year edging up, market edging up. Any type of market pullbacks, I think this thing's going to kind of cut loose on the upside. Here's the XLE. And again, we talked about, this is last week's information here. Nothing on the opening. But we talked about a better way to trade crude, maybe from the long side, picking a couple, like I think Williams companies, a couple other XLE stocks we looked at in the scanner. Let's pull that up really quick. Energy seller dweller, of course. There's Williams. Still hanging in there extremely well. That's exactly what you want to see when you're trading a relatively strong stock in a sector that continues to come down. A couple other ones, not bad, that we had looked at before. Put them on your watch list. Let's take a look at a couple other things I want to cover before we finish the 9 before 9 here. I want to hit currencies really quick. And we want to hit the euro. Obviously, it's inverse relationship to the dollar to some, for the most part. I think it's 35% of the dollar. But again, with profile appearing below price action, the dollar is probably going to slide. The problem is you don't have a chance to play defense on this trade right now, except using the 240s, as you can see this. So, trading breakouts again above 109.24 or pullbacks in a 108.74. That's the trade on the euro. Let's take a look at the yen. This one, it's, again, you got some more resistance at 112.55, 56. There's a little bit of a trade there on the previous unfair high, but I think you've got even a better one a little bit higher. So if you can hang in there on the yen, I think we actually might start coming off some finally. The British pound. Here's the weekly on the British pound. Finally had that spike up, breaking out of a weekly profile for the first time in a long time. Here's the daily, again, profile appearing below price action, very bullish. Here's the 240s on the British pound. As you can see, just kind of using this to regulate the trade up. Whew. All right. Larry's next. Thank God. Stay tuned for all the hosts on TFNN all day. We're going to wrap it up. Thanks for joining us.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.